We had better than expected manufacturing activity coming through on a global front. We had the PMI numbers out of China, well above 50 in the US as well, and notwithstanding the Eurozone and the UK. But let's look at South Africa's PMI, because it came in at 47.6 in October from 45.9, and of course still below that key 50 level.
Yes, with the PMI, the 50 level basically is the rate at which expansion or contraction is indicated. So what we're seeing is the South African economy still contracting. So we've seen very, very weak numbers out of the South African economy actually over the last couple of weeks. Also lower inflation than expected. So effectively what we can say is there's no credit being extended, the shoppers aren't buying, there's no capital expenditure. The only people spending in the South African economy is the government.
Well, we are lagging the rest of the world, but we are obviously hopeful because we're very close to that 50 level. How much longer do you think before we breach that key level?
I think that very much depends on where the rand goes, because we've seen some very interesting movements in the rand since the minister announced that they are going to start actively intervening in the rand, not to target a specific rate, but just to generally weaken the rand. So on a day like yesterday, for instance, where the US market was stronger, you normally actually get a stronger rand, and we saw a weaker rand. Now, there were some technical difficulties in Japan, which apparently triggered some stop losses. So maybe it was an exceptional day for the rand, but it seems like the rand may be a little bit weaker, and the rand is actually a very important factor in manufacturing in South Africa. So the PMI should actually, if we see a substantially weaker rand, the PMI should improve quite strongly.
The rand weakened to 8.28 in Asia in yesterday's trade, and we know it had to do with technical glitches. But when you look at how the US performed on Friday, I think many investors were just thinking that it is risk aversion that's coming to the fore. And of course, we've got to keep in mind that government has stepped in and does want to weaken the rand. What kind of repercussions did this technical glitch have in Asia for the rand yesterday?
I think that what apparently happened is that one of the big banks who trade in Tokyo actually left a very wide margin open for their trades, and they got hit on the one end of it, and because it was a valid trade, it triggered stop losses, or not actually stop losses, but margin calls. So actually some players had to close their margins, sell rands to actually deliver rands. That really kind of made for a weak morning, if you like. But by the end of the afternoon, the rand was actually back at around 780. So it seems like a kind of very short-term blip.
Well, the JSE was under pressure yesterday. We were down just under 1%. But let's look at how the banks and the resources compare to each other, because we know the rand obviously affects both of these sectors. It's
interesting that in the morning when you had the weakness in the rand, you actually saw the miners going better and the bankers going softer. And then in the afternoon, the miners weakened somewhat and the banks stayed weak. So it looks like there's actually quite a bit of worry among the people playing in the local end of the market that the rand may be weaker and inflation may be higher than we thought. So banks are being sold off actually.
Okay, Wikus, let's just go back to these PMI numbers, and I would like to zoom in on China because it's currently at 55.4 from 55. So a slight uptick there, but we know that it's all about the inventory cycle, and of course that has to do with the US as well. And with the US in particular, apart from the employment, which is obviously triggered quite a bit of increase in the PMI numbers as well, we've also seen production, which has also increased quite significantly. Do you think these numbers are sustainable?
It looks like they are actually. There was a lot of worry when the growth numbers for the last quarter came out that this was not sustainable because of the cash for clunkers that had been discontinued, and also some subsidies for housing that had been discontinued. But one of the criticisms actually early on of the Obama stimulus package was that it was backloaded, that most of the actual government spending would go in the second half of the year. So we're now getting to that second half of the year where there's actually very strong government spending starting to come on stream. So it looks like for the moment, for the next 6 months or so, we'll actually see very strong government spending really supporting the American economy.
Australia hiking rates by 25 basis points, and it's the second hike in 2 months, which is quite interesting to note because Norway has also taken cue from them, and of course the ECB, there's a lot of speculation about whether they'll be hiking rates as well on Thursday.
I think that's a little bit premature in the sense that the ECB still has a quantitative easing program out there, as have the Bank of England, as has the Fed. And typically what you would do is you would actually withdraw your quantitative easing first and then start hiking rates. So I think that what we're looking for in the ECB announcement is more how much quantitative easing can we expect to stay in the market rather than a rate hike. But yes, there are signs that central bankers are starting to say we need to go slightly closer to normal. Now, Australia was one of the ones who went very early and very aggressively to stimulate the economy, and they've actually succeeded in avoiding a severe recession in Australia, where we have been far less aggressive, and we've seen quite a deep recession in South Africa.
I think what a lot of the investors talking about now, and all the analysts on CNBC Asia this morning, are just talking about whether they are going to be harming the economy, because perhaps it's just far too soon to hike interest rates, because we don't really know where the demand for the key commodities are going to be going.
I think that if you look at how strong the Chinese and also to some extent the Indian economy has stayed, for the Australians to hike rates, I think is in order. I think the people who need to be really, really careful are especially the Americans, but also the Europeans and the British. They need to keep the stimulation out there for quite a long while yet.
The Fed also meeting this week, and we're hearing comments on the meeting, of course, tomorrow. Wikus, just looking at the Fed, because we know there's a lot of these stimulus programs that are coming to an end. The tax for first-time home buyers, of course, is set to end at the end of this month, so we don't really know what's going to be happening on that front. Cash for clunkers is going to start being weaned off the US consumer as well. Do you think the US consumer can step up to the plate? Do you think the Fed is actually going to expand on these stimulus packages?
I think that the Fed needs to keep what they've got out there, so they need to keep rates very low for quite a long time. They also need to make the market aware that they're going to do that, because that also brings down longer term rates. But I think that the one thing that you have to say is the new normal, the normal after this whole credit implosion, is that the US consumer needs to save more. They can't really step up and be the engine of global growth again. So we need the engine of global growth to come from somewhere else. Yes, consumers can make a small contribution, but they can't come back and be the real engine of growth.